5-minute DD. Welcome back, guys. Today we're talking about ticker ABR. This is a real estate investment trust, Arbor Realty Trust Incorporated. This is a really interesting stock. It's actually one of my favorites. So for those that are new to my channel, this is where I do some DD on these stocks. I compile all the information that I want to know before I buy into it, and I put that into the page on the left, and then we talk about it, my pros, my cons, what I think about it. And this is not financial advice, just my opinions on things. I do own ABR, actually, for those that are interested in knowing if I own it or not. And there's a number of reasons why, but let's talk about it real quick. If you guys could like the video, that helps me out a bunch. And we've already hit almost 60 subs, so I really appreciate that. Just in this last month, we've been growing like crazy. You guys are the best. Drop a comment on the next 5-minute DD video you want me to make. I love doing viewer requested videos. So it has an 11.42% dividend yield, even a little bit higher according to Google, which is phenomenal. There's a reason the yield is so high as of now. I mean, the stock is pretty beaten down, which is one of the cons that I'll talk about. But their dividend growth history, this is really, really important. So we're jumping over to NASDAQ.com. This website, I love it, but the ads are always so buggy and it's irritating. They're kind of in the way, but so this has it at an 11.42% dividend yield. Annual yield is $1.60 a share, which is impressive. What's the price? It's about 13. So yeah, it's a high yield. I really do like that. And they've been growing their dividend really consistently. I mean, look at that. Just from 2021, from August, we are up 5 cents already. So it's had a really insane period of growth, and the dividend growth goes all the way back to, I mean, you can probably guess when they cut their dividend last, 2008, but they were sitting at some insane dividends back then, from 17 cents all the way up to over 70 cents, and then they trailed back down, and then the 2008 crash happened and they cut their dividend, which is unfortunate, but is the story for a lot of stocks and a lot of REITs in that time period. Very few that I've looked into were able to consistently pay out a dividend in that point without cutting. And so I don't hold that against them, especially when you're looking at a REIT. It is really, really hard to go through the markets that were happening in 2008 and not cut your dividend, not stop your dividend. As you can see, they did stop it from 2008 all the way to 2012, where they started building it up again. And even in 2012, they went from 7.5 cents a share all the way up to 11 cents. And since then, they've been growing like crazy. 13, 15, hitting 20, hanging around the 20 area, going to 30, and now from 30 they're going up to 40. So the dividend growth is insane. It's one of my favorite things about this REIT, and it's also really important in my opinion because even though the dividend yield is high right now because of the price that it's currently sitting at, it's nice knowing that you can see some growth in the future as long as we don't have another crash like 2008, knock on wood. It's a very diversified portfolio that is predictable. And so the important thing with that is that they put that in their investor relations website, in their presentation on their website. And that's really, really good because it means that the company is able to predict long-term what they need. Predictability is not easy for a lot of companies, especially when you're in like, you know, the consumer sector. You have no idea what consumers are going to do. You have no idea how they'll react to different portions of the market. So the fact that they are able to look at their owned properties and keep a very consistent, predictable income shows a lot about the management team, that they're buying properties that they know will fit into that category. But it also means that us as shareholders, if you are a shareholder, that you're going to get that consistent and predictable income every month, which I really do like. And if, say, you know, they have a bad quarter, they'll be able to tell pretty early on that they're not going to meet the criteria for that quarter, and hopefully would let people know. But again, they've been growing for so long, they haven't had to do that. So capital structure is $16.921 billion. That is a really insane amount. Market cap's $2.3 billion. So they have a lot of money in the market. That's where they have it placed all over. They do specialize, they do multifamily properties for the most part, which I do like. The 3-year return, this is from their investor presentation, 30% annualized over the past 3 years, a 30% return over 3 years. So that's pretty insane. And if we look at the chart, honestly, they're down this year 27.5%. But if you go to the 6 month, they're only down about 1%. So basically these last couple of months haven't been as terrible, but spreading out a little bit farther, we can see that they did run from like the pandemic plunge up almost 400%, which is insane. So They soared past their previous high on the year by 27% and now are trailing back. But if we go to their pre-pandemic, they're still down 10% from their pre-pandemic price, which just shows how powerful these markets have been. But we can also see that these last couple of months, they did jump about 27%. And then of course it fell down again. So it is all over the place. The market's all over the place right now, but this is a really good chart in my opinion. And if we go to their max chart, we can see they had some insane things happening in 2007. And then we had the housing market dip. Since then, they've grown. I didn't check this out earlier. They were 88 cents, over 1,990%. That is insane. So it is an interesting company. There is a very crazy history with this one, but I do think the growth here, had you purchased right after, some of that plunge, which, I mean, if only, but still, you're talking about near 100% gain just over the span of 10 years. So, and that's not with the dividends included, which is important to note. The REIT is up 58% in the last 5 years. We saw that, and that's with the last 28% dip that we've seen. So it was up really, really high, and their growth has been insane. This is a chart from their presentation. And I like it because it shows that loan type is bridge loans. Multifamily is 92%. Single family is 6%. I like multifamily a lot better because it is everything kind of clumped into one area. Single families can be more difficult because with renters going in and out, which can happen with multifamilies as well. But with multifamily, typically you have at least one unit filled of the 1, 2, 3, 4, however many units it is. And then this is where they're located. Other is 52%, 6% in New York, 8% in Georgia, 13% in Florida, 21% in Texas. So good spread. California, I'm from California. California's not a great place to own rentals, so I understand why there's no California. At least a large portion of it is not California, which is honestly good in my opinion. California renting markets are, if you don't live in California, you probably don't know, but it's pretty rough down here or over here. So jumping into the cons about this stock, this REIT, it is down 28% this year, which is scary, but a lot of the market is down a lot worse. Now, that's not saying that they haven't been doing anything to kind of prevent that. They do what they can, but it is a REIT. They are paying out 90% of what they're making through that dividend, which is great. It's just how the market's going. If you guys are new to investing in the market, when a stock runs like this did, when it runs 200, almost 400%, I think from low to high, you're going to have some pullback, and the whole market is pulling back. We are in a bear market. It's a recession. It's what we're doing. We're going to have to deal with it. And that's why I like scooping up shares with some of these, when they are lower, because this is the time to buy, in my opinion. Not financial advice. Quarterly dividends only, not monthly. Typical REITs pay monthly dividends because they get that income each month from their tenants. I don't know why ABR is doing the monthly or non-monthly. I don't know why they do quarterly. They just do. Oh, they did have a special dividend too in 2018. So I do like that they do pay out special dividends every once in a while. That is pretty cool, even though hasn't been recently. And then the dividend cut in 2008. So that's just scary because they did have to cut their dividend and they stopped their dividend for a whole 4 years. So if we were to see the market crash to that extent, we could expect that. There's a really, really big difference though between what's happening now and what happened back in 2008. For those that don't know, that was a real estate crash, that the real estate crashed the market. What we're looking at now is the market crashing, pulling real estate down with it because it was overinflated. So back in 2008, the real estate market was going insane. Everybody was buying in. And then when it crashed, it basically caused all these people to pull their money out of the stock market and to start saving their money, not invest it. And that's why the market back then, the stocks fell in response to housing prices, whereas now the stock market, the overall market is falling, but it's not because of the real estate market. So that's a really big difference to note. And so lastly, not financial advice, guys. If you got content from this video that you enjoyed, if you got information that you found useful, please like the video. That helps me so much. Please subscribe if you are interested. And if you're not, that's totally okay. If you don't like the video, you think I made a mistake, drop a comment, drop a dislike. I'm always open to criticism. But hopefully you guys don't feel that way. Hopefully you got some information out of it. I enjoyed making the video, and so I hope you join me on this YouTube journey and check my other socials down below. Thank you guys. Hope you had a good day in the market.